Alright guys, today I have an absolute banger of a comparison video by ultra popular request. I want to take a look at Disney, ticker symbol DIS, and I want to compare it to its rivals. We're going to take a look at some figures. We got a lot of charts, a lot of data, a lot of lists that we're going to watch through, and I'm going to try to figure out whether it's worth to buy right now in the markets. DIS. So first, I want to start with the overview here of Walt Disney. I use stockanalysis.com for all these numbers and pictures and bar charts. So first, one thing I want to note before I even start here is the stock price performance. I want to compare it to Paramount, Netflix, Warner Brothers. See how these companies have been doing over the last 5 years. As we can see here, Disney is at prices that were seen back in 2017. It's almost as low at its pandemic low during the March of 2020. And it's not the only company that's suffering like this. A lot of streaming companies have actually corrected quite a bit. This is Paramount. It's not quite the pandemic lows, but it's not doing very well price-wise over the last 5 years. Has probably lost, it's more than 50% down. And rightfully so, by the way. These companies have gotten hit pretty hard, but their valuations have been really up there for a very long time now. Netflix is at valuations not seen since 2017 as well. It's a pretty major correction here in the stock price of that company too. Warner Brothers, I think they recently either renamed or re-IPO'd or whatever, so we can't really look at that. But in the last year, I mean, they've done really poorly since, this year. So back to Walt Disney. First things first, we're going to look at this little chart here that just gives us an overall view. This is a shallow dive, all right? So once you do this, by the way, once you go through this is just an invitation to do even more research, okay? I'm just going to do some relative valuations and see how the company is doing from kind of a bird's eye view, okay? So nothing, this is not your due diligence. All right, so it looks like Disney was making money and growing revenue and earnings fairly steadily. It looks like 2018 was kind of an outstanding year. In 2019 it dipped. Obviously 2020 was a disaster. And well, not as bad a disaster as some company, but I'm sure their parks really weighed down on their earnings and revenue. So it's possible that 2020 could have been a record revenue year. In fact, I'm betting it would have been. 2021 they made a little bit of a resurgence, but the reality is that there's only $2 billion in profits in 2021. So unfortunately, it's been a slow grind back upwards, not quite recovered to its pre-2020 levels. So next thing I want to look at is a little more in-depth look at these numbers. So quarterly, I like to sort it by quarterly. I'm going to take a look at the revenue here. You see that the revenue is actually recovering quite well, and it's already up to 2019 levels, and it's probably going to exceed them the way things are going. Now keep in mind though that inflation is real, right? So just keep that in mind. So real adjusted numbers, these are not increasing very rapidly, but let's just stick to nominal for right now. Another number that I like to look at is the operating income. And so you can see here that before 2019, even into 2019 when they were growing revenue, their earnings were dipping. It's probably because they're reinvesting a lot in order to grow that top line, which is fine. I'm totally fine with that. They had a lot of things coming out, a lot of new products and things that were increasing the size of the company basically, and that's fine. But it's been really slow to recover, and I don't know how they're doing on their reinvestment these days, and whether that's still the plan or they're trying to put the company in recovery mode. Next thing I like to look at is the shares outstanding. So it looks like they issued a lot of shares 2019, probably for the same reason, to grow the revenue line. And then it's been fairly flat ever since, including the 2020. So I like that they didn't sell additional shares to try to deal with emergencies and shore up losses in parts of their business and try to basically pass it on to the shareholders in a stealthy manner, if we can say that. So we can look at the profit margins here, I guess, in this menu, and you can see they're kind of rock bottoming. So this business has really been struggling ever since 2020, but even 2019, they decreased profit margins probably for, again, reinvestment and trying to grow the top line a little bit. Top line just means revenue. Okay, and so next thing we're gonna do is look at some statistics. So it's the market cap of the company is 173.4 billion. Enterprise value 2012, which suggests about a $38 billion debt. So you can see that net cash here is 38.75 billion, which is quite substantial, especially even relative to the peers of content creators. Basically, these guys are the mother of all content creators. They own a lot of stuff. We're gonna look at that in a second. We got a lot of data here. Other things to look at, by the way, they suspended their dividend, right? They don't have that anymore. Other interesting things, EV to earnings right now is sitting at 80, which is enormous. PE is 65. So what that means, basically, a price to earnings of 65 means that it will take, if you invest $100 into the company, it'll take you 64 years at this rate to get an extra $100, to get 100% return on your invested capital here. So at this rate, it's not going very well. Obviously, the company is capable and was capable of doing 10 times that in previous years. So it's not that big. Sorry about that. It's not that big of a wall to climb. If they're just the way they do their business, they should be able to get like 10 times that. So keep that in mind as we go through this video here. Price to sales ratio 2.26, not bad. So these figures all look bad for numerous reasons. Return on invested capital is only 5.7, return on assets 1.3, return on equity only 3%. The margins look pretty bad too. Profit margin is 3.46. I guess it's not the end of the world, but like I said, I think it's just the way they run their business right now, and they could switch that on in the future. And also, their physical locations have been pretty much a drag. Although I do have to say that in 2021 and 2022, there's been resurgence on vacation travel and airfare and things like that. And did you guys know that they actually own like a little corporate airline? I didn't know that. I just found out today when I was doing some research for this company. So it's crazy. All right. So those are some unique facts. So some things that, before we go into look at the competitors and how they're doing, one thing that makes Disney a little bit unique and sets it apart from these other companies that we're going to look at, and I want you to keep that in mind as we go through the video, is the amount of land they own. These guys are landowners, man. Like, look at this. They have basically 30,000 acres of land just in Florida. Just in Florida, right? Disney World and whatnot. That's 48 square miles, guys. Do you own 48 square miles of land? Like, how much do you own? Because they have 48. Okay, square miles. Like, 1 square mile is an enormous piece of land, right? How about 48 of them? And that's not all. That is not all. They own just 580 acres in other parts of the world here. They just have a zoo. Oh, I'm sorry, that's their zoo. Where was there was a figure here that shows how much they own in other countries. Okay, here we go. 494 acres in Tokyo area alone. Obviously, that's not center Tokyo. Otherwise, it would be worth like trillions. But I actually don't know where it's located. But apparently, it's a massive Tokyo park complex. If you didn't know, if you're watching this video, you probably know, but Disney is absolutely huge in Japan. They just love it, absolutely love it. But 494 acres of land. I don't know what the laws and rules are in Japan, so maybe that's with an asterisk and caveat. Some countries have different laws about land ownership and whether it's really a government lease or whatnot. But they do have a ton of resorts, thousands and thousands and thousands of rooms worth of resort space. So just keep that in mind. I think it's a really nice like backstop that this company has that others don't necessarily can point to on as far as their competitors go. So all right, moving on. Before we go into the other tabs, we're going to compare this performance a little to some other companies that are in their league, and then I'm going to summarize it. And once I have it just written down real simple letters later, we're going to take a look and try to make some conclusions, all right? But first we go to Paramount. So Paramount is another content creator. They're a much smaller company, about 1/10 the size. And let's see how they did in the recent time period. We'll look at similar figures. So for example, revenue, it looks like it's pretty stable. Didn't really have a dip in revenue there. Operating income is pretty damn stable. It's with a slight loss here in 2019, all the way through the pandemic. They actually did really well comparatively, percentage wise. Let's see about how to deal with the shares. Shares outstanding. So they issued some shares, so that's not too good, but I guess it's excusable. They haven't doubled it, but maybe they increased by a third. So it happened in late 2019, I guess, early 2020. So I don't know what kind of it's an acquisition or whatever, but it's immaterial. Okay, so let's go into the statistics. You can see that they actually have quite a bit of debt here as well. 29 billion enterprise value versus 16 market cap. That's about 15 billion in debt, right? 13 billion in net cash. Let's take a look at some of their margins and stuff. So their profit margin is actually quite a bit higher. I mean, it's like 5, 6, 7 times higher. I don't know. It's quite a bit larger, and the valuation is extremely compressed. We're going to look at it in a little bit plainer numbers and towards the end of the video. But the PE ratio of Paramount right now is 4.27 versus 65 or something for Disney. And I know that they can Paramount right now is on the afterburners, basically, like they're really pushing their earnings, and Disney is not. Okay, so keep that in mind. But still, even with that reality here, 4.27 ratio is quite a bit of a difference. Also, Paramount is paying a dividend, by the way. Payout ratio is only 15.5%, which suggests extreme health, and the size of the dividend is quite large. So they are looking after investors. Even considering this share dilution here. In 2019, I don't know exactly when it happened, but I guess 2020. Even with the share dilution, they're still looking after investors, and they're not issuing shares at such a large pace as they were. I guess a tiny bit in 2021. So not too bad. Okay, we've looked at the statistics, looked at the profit margins. EV to earnings is 7.24, EV to sales 7.24, EV to sales. EV just means enterprise value, so that's less. It's basically the market company less debt. Okay, so next one on the list here is Netflix, another global player, very very much competitor to what Disney's trying to do, content creator number 3. So the size of the company is $84 billion. And we're going to look at this growing revenue every year, including 2020, including 2021, and an extremely steady pace, might I add. The earnings also look spectacular in 2021. We do know, though, recently that the company has been a little bit of a trouble. Specifically in this year, they actually lost subscribers for the first time ever, so it's been quite a big dip. But even considering that, we're gonna take a look and at the end and see if we see some relative strength there. So, and in the financials, we'll go to quarterly figures. So the revenue figures look like this. This is, you can see that Netflix really cares about their top line. They really care about revenue growth. It's very smooth and very organized, but everything else underneath probably not as organized. For example, their operating income is all over the place. I mean, it's not horrible. Actually, it looks like they're making money. So I wouldn't count Netflix out. Maybe delete the prospects for hyper growth, but I don't think they're going out of business anytime soon. Shares outstanding, flat for the most part, very little change. That's good for investors. So if you own a share 10 years ago of Netflix, you probably own the same today. Let's go to the statistics. It looks like the market cap is 84 billion, enterprise value 92, which suggests about 8.5 billion dollars of debt, which is not nearly as heavy as Disney, or even Paramount, right? Paramount's pretty indebted as well. So I guess Netflix has that on those two companies, especially as a percentage of their market capitalization. It's not looking too bad. Look at these figures on Netflix, though. It's actually pretty good here. Return on equity, return on assets, return on invested capital is looking pretty good. Oh, one thing I wanted to point out, by the way, about Disney, let me back up a little bit, is do you see this? Income tax paid by Netflix is $778 million, 13.45% effective tax rate. Look at Disney's. For some reason, they paid $1 billion almost of tax and a tax rate of 25.22. So something in there is not really clocking in. Like, I don't know how they're maneuvering their finances, but it's not very efficient, tax efficient, to say the least. So maybe keep that in mind too. All right, what are we going to look at now? Profit margins. So here are the margins. 41% gross margin. Okay, so profit margin is 16.47. So almost on par, on par as Paramount, and a lot better than Disney. So next, we have one more company to briefly take a look at. A competitor of all these is Warner Bros. So I tried to isolate, kind of like the pure play content creators, I guess. Obviously, they're not all pure. I mean, Disney has the physical properties and whatnot. And actually, it might be a good time for me to mention what percentages of the business those things are. So I have a really convenient bar graph here to represent what percentage of their total revenue each part of the business is. So you can see here that the parks and experiences portion of Disney brings in about 16.55 billion of revenue. And then, that's a very small percentage relative to media and entertainment and, the network sales and direct to consumer. Direct to consumer is basically their streaming services. So that segment, I think, has been growing over the last, whatever amount of time ever since they started. And is becoming a larger portion of their business percentage wise. But, media and entertainment's huge. There's like movies, shows, etc. And licensing, whatever. So just to put that in perspective, the parks are actually, a small part, maybe 15% of their revenue. Or this is, I think it's 2021. Yeah, in 2021. All right, so next we're going to look at Warner Brothers. Warner Brothers is another competitor. And the market cap of this company is almost 34 billion. Let's scroll down, see how they did over the last few years here. Since 2015, they only had one losing year, which was 2017. They've been growing revenue and earnings kind of sporadically, I guess, but one down year over the last 7 is not bad. Okay, let's take a look at their finances. Quarterly revenue line looks great, fantastic. Nice bump here in 2018. I guess they acquired something probably. Operating income is fairly flat, which is a bit disappointing, I guess. Um, I guess that acquisition might have happened in 2017. You can see the big line down. They probably paid out cash for the deal. I don't know what they acquired. Maybe HBO or something. Who knows? Because I know they have HBO Plus, right? I don't know what they acquired. If you know, you can write in comments, but it doesn't really matter. They acquired something, increased their revenue, that's great, but operating income has actually been slowly declining over the last 3 years. It seems like it peaked out in 2018, then 19, 20, and 21 has been a bit of a struggle bus. Okay, so shares outstanding has been fairly flat. You can see that deal in 2018, they probably issued some shares to make that deal, so they probably paid cash and shares for the acquisition. That's just a guess. But they've actually been buying back shares in 2019 and 20, trying to return some of that value back to shareholders and even out, the part ownership of the shareholders, so they're not as diluted. Statistic wise, 44 billion enterprise value, 34 billion, so that suggests about a $10 billion debt, which we can see right here. Net cash 10.24 billion, which is kind of on par with the rest of the these content creators, right, and streamers. Entertainment business, I don't know what you're going to call them. Let's stick with the margins. Actually, before that, return on equity, return on assets, return on invested capital is not mind-blowing. Profit margins, that's a really big difference between the gross margin and profit margin. So I guess they don't have a lot of overhead. Anyway, tax paid is 20%, kind of high, but not too bad considering Disney's. So I guess these guys like to pay their taxes. It's good. All right, dividends, they don't pay any. Okay, very interesting. Okay, so that's Warner Brothers, right? Now, next thing I want to look at for Disney is to get a better sense of what the company actually is. I want to look at their asset list. So what we're going to do here is I've pulled up Wikipedia and we're going to go through some of the stuff that they own, which is always interesting. So first of all, one thing that struck me here is that, look at this, Earthstar Inc. Did you guys know about this? What is it, you ask? It's a corporate airline, so they have their own corporate airline. That's cool. All right, so moving on down, this is the live action productions, which is, I think, the bread and butter of their asset list. So obviously they own Walt Disney Pictures, Marvel Studios they acquired, right? Lucasfilms they acquired. I think all these are great moves, by the way. 20th Century Studios. So this is a fantastic list of movie makers and show makers. So I think it's awesome. Searchlight Pictures is in there. Searchlight they're pretty good, and all that comes with all these subsidiaries, which you can take a look at. You can read through. They have all the animated production that's associated with that, including Pixar, right? And they have Walt Disney Animation, Marvel, Lucasfilm Animation, etc. So studio production services, and then the theatrical group, I don't even know what that is. I guess they do theater. But I can't imagine that's a big portion of their revenue. But anyways, Disney General Entertainment Content. So this is interesting here, right? They own ABC, okay, ABC News. They own FX, right? FX movie channel. So they own a lot of TV channels, Disney television, animated, blah, blah, blah. National Geographic. It's worth mentioning that Disney has National Geographic too. So that's always nice. They also own the A&E networks, right? They own the studios, the TV networks, etc. Everything associated with that. They also, Lifetime is in there. The History Channel. Everybody knows the History Channel, right? H2. So all of that is under Disney. On top of that, they made another acquisition, right? They acquired ESPN. So they've just been really purchasing a lot of stuff. There's one controversial holding here that I really want to zoom in on, which is very not Disney-like, and I don't know what they're going to do with it. But as you're looking down through this list, you can see at the very bottom they actually have a minority investment in Draftkings. Now, I would never expect Disney to take a part of, Draftkings. So I don't know what that's all about. And Draftkings, by the way, has been, plummeting. They haven't been doing well. So it probably weighs down on the company a little bit. Advertising and distribution, okay, they have their own advertising companies. So Walt Disney Studios Motion Pictures, Buena Vista Theaters, etc. I don't know how big that is. I can't really provide a scale on those holdings and how important they are. I don't think, but judging by this short list, probably not by much. The Disney Music Group. Moving on down, direct to consumer. So this is big, right? So Disney Plus, everybody knows, but Star Plus, I don't even know what that is. I think it's that's right, the Latin America, streaming service there. And did you guys know they own 67% of Hulu? They basically own Hulu. So they have Disney Plus and Hulu and ESPN Plus. So that's quite a bit. I mean, there's some big, combined. That's a big share of the streaming business worldwide, really. They also, I didn't know this either, but they also own NHL TV. I don't know how big that is, but it's interesting. So, digital productions, Disney retail, of course, they're really big on retail. They sell a lot of Disney related goods, clothing, etc. Other things worth noting is, I'm just going to skip down. They have a publishing company, etc. Parks and resorts, it's a really big portion, right? We saw that 16 billion is derived from that. Disneyland Resorts, etc. Disney World. I'm going to skip down past the international stuff into what I want to focus on, something here that not many people focus on, which is, oh, by the way, they own like Fox Network Group too, and all these other channels. They own. Let me scroll things further down. Marvel Entertainment. Okay, here we go. Look at all these property holding companies. Right? Do you see this thing? Are you looking at it? Like, look at all these companies. And they all have holdings of their own. It's actually probably even worth going in there and researching every single one of those. Like, if you want to do proper due diligence, go in there and find out all the list of all the properties all these companies own, okay? And try to add up the value. I mean, it's probably huge. We already mentioned like the 48 square miles of, property that is just in Disney World. But what about all these? How many holdings do these companies have? Like, what kind of properties? How many hotels? You know what I mean? Like, okay, fine, the Dolphin Hotel, this is just one. But Homestead Homes, you know what I mean? The Little Lake brand. What are these? Boss Realty? Like, we gotta find out what these things have. The Swan Hotel, so all these different hotels and property groups. Florida properties, okay. So, and also they have their own financial services group, which is interesting. I guess it's services, all their property holding companies. So they have one thing that's, I think, unique here, not unique, but advanced, I guess, is that they have a lot of things happening in-house. Okay, they have a little bit of a vertical integration on their process, and I actually like that. That should be a premium. But speaking of premium, I think this video has lasted long enough to where we can finally do a final simple comparison between the streaming companies, find out whether Disney is actually overvalued or not. So there's a lot of things to keep in mind here, including the properties, the holding companies, etc. Okay. The fact that they've been burning through cash trying to grow their revenue and somewhat succeeding, like, they can boost up the earnings if they want to do some cuts, etc. However, all that being taken into account, this is what we're looking at here, okay? These are the figures. So the first figure is revenue. The second figure is earnings, 2021 we're talking about, and their current market capitalization. So, no matter what has been going on, what kind of decisions and intermediate actions these companies are taking, this is reality, right? The reality is that this is how much money they made in 2021, and these are their valuations, okay? I don't care if it's physical based, digital based, like this is it, right? Disney, 67.5 billion of revenue, 2 billion of earnings, sitting at 174 billion market cap. Compare that to Netflix, the second largest company on this list here, 30 billion in revenue, so half the revenue, more than twice the earnings, half the valuation. Okay, so it's literally earning more than twice the money than Disney in 2021, and it's only priced half of that. The real banger of a list, look at Warner Brothers first, the last one on the list here, 12 billion, 1 billion. So this company made half of the earnings of Walt Disney, and it's a lot less than half of its valuation, right? Like 6 times, I don't know. Yeah, so 1/6 its valuation. But the real banger here is this money cash generating machine. This is not a Paramount video, but just to put it in perspective here, this company, Paramount, revenue as much as Netflix, a little bit less, half than Disney, made as much earnings as Netflix in 2021, more than half the earnings of Disney, and it's 1/10 the price. 1/10 the price. So that either speaks to extreme undervaluation of Paramount or some overvaluation of Disney. I mean, if we can put them in a similar boat, they're both big powerhouses, or they're motion picture producing assets, and they both have streaming content and whatnot. But Paramount is circling like 4.5 billion with a market cap of 16.3 billion. That's crazy. It has a P of 4. What? So you can see here it paints a little bit of an interesting picture. I probably think it's a bit of a mix. I think that Disney is actually pretty fairly valued considering future growth. Their asset list is pretty impressive. Paramount's asset list is pretty impressive too, but I think Paramount is extremely undervalued. Like, it should be worth at least 3 times what it's worth right now. 16 billion is a joke. I mean, it has to be at least worth more than Warner Brothers, right? I mean, it's got more than twice the revenue and like more than 4.5 times the earnings. It can't be half of its price. It just doesn't make sense on any level whatsoever. They are a little bit indebted, so it is weighing a little bit on them. Paramount is, but still, extreme undervaluation. If we assume that Warner Brothers is fairly valued by these numbers, and Netflix is somewhat fairly valued, right? Then I can see Disney trading a little bit of a premium to them, but I can see them drop maybe another $20 billion, $30 billion in valuation. But I think the floor is near. So final verdict here with Disney, I actually think it's a buy. I think maybe if you want to risk it, wait another 20 billion fall. So maybe buy it around $150 billion market cap. Let's take a look at the price action here and see what that actually means. So this is the chart. I mean, you could theoretically wait for that $85 level, but I would feel comfortable buying here. I mean, I actually don't mind. What you could do is this is not financial advice, by the way. You got to do all your due diligence, etc. yourself. Nothing I say here is financial advice. It's for entertainment purposes only and informational purposes. Um, I would feel totally comfortable, laying in selling some put options here. Try to get it at like $90 per share or something like that. And then if that hits, maybe try to get some more at 80 or 85, and try to layer, an entrance point into this company. So actually, when I review these companies, I do these shallow dives. I rarely really like the company. I mean, Paramount I really like, but most of the companies that I've done shallow dives on, and by the way, I have a whole playlist of them, so if you want to go through them, they're all fairly recent. I've done like maybe 15 or 20 videos already. They're all done within like the last couple of months, so they're pretty fresh. You can check out all these companies, and I rarely actually like companies. Maybe 3 or 4 of them I liked so far, but I think Disney's it's good. They've got a really, really strong branding. They've got, they're growing. They're trying to expand as a business. They have quality. Their financials don't look terrible. They're making money again. They're probably a little bit overvalued, but I think they should be trading at a premium for a lot of the reasons I mentioned on this video. So there you go. That's the final verdict. Now, this video's been really long. I put in a lot of work in here, so sorry about the length, but hopefully you got a lot of value out of this. I certainly did while I was researching the company, and it actually made me less afraid of it. I did own Disney once before, and but it was a very small amount, and I didn't do a lot of research, and that's why I exited the position. But it's a very small position anyway. So I may actually do some more research, find out what these companies hold, and actually buy Disney because of that backstop. So anyway, hopefully you guys like that. I'm probably going to make another company video tomorrow. But what I do is during the week, I actually have a public portfolio of stocks that I try to get to $1 million. Started from like 30,000. Right now it's sitting about 185,000. So I share like a daily update basically from Monday to Friday. So if you want to check some of those out, you can. And I also do a little commentary. I try to record my like mental state during that period and see what I was thinking, so I can come back. And it's kind of like my form of journaling. But if you want to check it out, that's fine. Maybe sometimes you pick up an insight or two, and you can get my commentary like on the fly from day to day. But if you're interested in that, you can also check those out. But anyway, I gotta end it right here. It's already been like 37 minutes. So I don't want to take up any more of your time. That's it for now. Peace out.